Hello and welcome to Wyckoff Training Academy. It's been a long time, haven't uploaded any video as such. So, in the morning or like in the afternoon, I got a request from one of my students wherein he asked for analysis report on xauusd. And in one of the group, I initiated a poll pertaining to or asking about top-down analysis the way I used to do. Basically, I used to do top-down analysis of Indian stocks for Indian traders, wherein I used to select random 20, 30, or 40 stocks, and on weekly basis, I used to do the analysis, and which would eventually help the trader to take an informed decision and take be prepared for either short or long or either buy or sell well in advance. So having said that, this I initiated a poll and I got some two people participated in that poll and they asked about getting top-down analysis the way I used to do for stocks. Uh, so without any further ado, we start. So the main idea behind doing top-down analysis, basically there is one thing, there is bottom-up analysis, and second one is top-down analysis. So this week, this or coming 2 or 3 weeks, I'm planning for top-down analysis. And if I get audience from this particular group asking for bottom-top analysis, then that I'll also do. So in basically in top-down analysis, we look into higher time frames like M stands for monthly, W stands for weekly, D stands for daily, H4 and H1. Normally people do this much of analysis and they don't take into consideration H1. But H1 is the one time frame which I pay more attention to compared to all the four upper time frames. So having said that, what is my logic behind doing this top-down analysis? For doing the top-down analysis, I'm using my Wyckoff tape reading toolkit, which is purely based on Wyckoff three laws, Wyckoff uh, price behavior study. When I mean, when I say price behavior study, or that means the exchange of hand taking place between demand and supply, or vice versa, or exchange of hand taking place from buyers to sellers. So this is normally referred to as uh, distribution, and this is normally referred as accumulation. So vice versa. Uh, there are very I will not get into schematic because that I don't use now because the reason that I struggled a lot with it. So that's how I inculcated all the Wyckoff rules which were laid down by Richard D. Wyckoff, and which he stressed upon, like identifying uh, like he used to call composite operator, which nowadays we call them as smart money or people with deep pocket or institutional investors, whatever you know name or whatever you call them, they all are same. That means they are the movers and shakers of the market. So having said that, uh, this entire toolkit is purely intended to identify what has happened in this particular session of bar. Like if I'm looking at monthly chart, so I'm keen and I'm looking into what has happened in terms of Wyckoff in this entire month. For example, if this month is of September 2020, so I want to understand what happened into this entire month, so that based on that I can plan my rest of the trading uh, decisions or trading activities around it. So please keep in mind this tool is not just a mere tool. It is much more advanced and much more. This will refine the market in a way that you haven't imagined, because it will always keep you ahead of all the other things, all the other indicators, because all the indicators, unlike like any indicator you use, they are all lagging indicators. So again, I'm speaking slowly. The reason being said is uh, there are many people who are watching my videos and from other countries which who are not native English speakers or speaking people. So they use tools, various tools to get the subtitles or Google Translator. So having said that, we'll dive into what are the nitty-gritties of top-down analysis and how it is going to help you. So, as I told you, I'm interested in what has happened in individual bar or individual session candle. Previously, I normally trade based on bars, and I don't trade based on candlestick. But I devised a way to get whatever this tape reading toolkit is assessing to get printed in candlestick form. That there has to be some adjustment done into your candlestick settings. Then you will be able to see all the candles. Hollow candles means they are neutral candles. Green means they have certain demand, and red means they have certain selling. White means no demand, no supply. Yellow means a trend change is evident or is about to happen or about to take place. Like for example, if you hover your mouse on the high of this particular yellow candle, you can see trend change or price will continue the previous trend. So this is the a shorter intro of what this toolkit is, and I'll be sharing my analysis based on this tool. So just to give you an understanding how market works based on what I have learned from David and what I have learned from by reading and by going through and by analyzing Wyckoff, Richard D. Wyckoff's work. So what I have understood is price there is price if price has to go upwards, it will not go instantly. That means if there is a selling taking place and that selling planning to exchange its hands with buying. So this will not happen on 1 or 2 bars. So that's the reason Wyckoff came up with some schematic, and the schematic part is completely tricky because uh, like if you're doing top-down analysis of monthly, weekly, daily H1 or 1 hour or 4 hour, so what will happen? You will not find this schematic working on uh, like monthly on a regular basis or weekly on a regular basis. So this is a problem which is commonly faced by uh, uh, various traders. With due all respect, there are certain traders or experts, because I am a technical analyst and I'm practicing Wyckoff. And still I call myself a student, though I'm teaching and training many people across the globe. But I consider myself as a student. The reason being said that there are many masters or so-called masters of schematics and all this stuff. the people are trying their level best to sh- uh, share their analysis or share the schematic analysis with the people. But I don't find it workable, or I don't, though I have tried it and inside out, and have invested more time in understanding how to apply it in uh, on a daily basis, or like on a weekly, monthly time frame, or without time frame, like on tick charts also, how we can use it. But it doesn't happen, because many a times we see the buying climax and price goes up, and many a time we see selling climax and price goes below. So having said that, I'll come back to our top-down analysis part. So, for example, this was the price move from this particular 1.10 till 1.22. I consider it as 1.22. So this was the price band which Euro USD was about to go or take place, or this move was about to happen. You would have got some signs over here. So these are the things which we would be looking into this current scenario, so that at least we will have a fair idea whether the market is going to go upwards or downwards. There are only three ways for a market would go: either upwards, downwards, or sideways. Okay, so everybody knows, if it goes upward, then what I will do, and what if it goes downwards, what would be my course of action? What if it is sideways, then what? So having said that, we have, by using this tool, I normally try to identify the key areas where there is a high probability or high chances of supply exchanging hands with demand, or you can say transfer of supply to demand. And if this occurs at this particular point, then there would be a like up move or a bull move, or you can say markup phase, whatever you want to call it, or whatever you want to name it, whatever you want to name it. So I'll walk you through this thing. So this part will become easier for you. Now, like this selling part, first of all, we will look into this up move. So this up move was, if this, I am considering this portion is not printed till date. I'm in 2020. So when I see this demand, this demand, this demand, and when after reaching a certain point, I see first supply, absolute supply coming into the market. If for assessing that, if you hover your mouse over there, supply on the triangles or on the edge of the triangles, you will see supply is greater than demand. Like especially for those people who have bought this tool of mine, you can this is a way you can use. You can hover your mouse over the triangle, and you can see what has happened in this particular duration of particular candle, whether demand was was is in play, or whether the supply is in play. So having said that, uh, these are the two areas where demand was there, and there was some sort of like you can say arching over taking place, and this is the first supply. After this first supply, you can see there is no demand. This particular white candle is something which is talking about no demand or no supply whatsoever. So no demand or no supply. So depending upon the positioning of this candle, but if it is appearing on the top or on the, normally it occurs in between of the reversals, or you can see it at the end of the move. So this gives us an early signal that the demand which was here, which was here is like exchanging their hand with supply, and in the coming session we would see price toppling downwards. So it happened as we are coming down. we see this was a sign of no demand. So this point prices were coming downwards. This candle plays a vital role. This is my baby. I based on my 15 years of experience, I came up with the analogy of this yellow bar. This is the trend changing price level. Whenever this kind of bar prints after a continuation of a downward move or an upward move, so it normally suggests us that there is going to be a trend change. Sometimes it is instant trend change. Sometimes it is an early sign that gradually we would be seeing a trend change. So after seeing this one, we try to go downwards, but look at the progression of the price. It is to some extent it is losing momentum, and all of a sudden we get a demand greater than supply kind of a bar. So this shows that buying has started coming in, and this was the early sign the trend is going to reverse. And again we came down. There is shorting of the thrust. Now many people ask me what is shorting of the thrust in terms of many other ways. But what I say, shorting of the thrust is something which is very different because nowadays shorting of thrust, after shorting of thrust also, we see price going downwards. If I say this is a shorting of thrust, many cases I've seen price coming downwards. So shortening of thrust is there, but if there is no whatsoever demand present or new fresh demand coming into after the shorting of thrust, then this shorting of thrust is not doesn't hold any validity. So you cannot plan your trade based on it. There should be, if there is a shorting of thrust kind of thing happening or arching over a scenario is taking place, so there has to be demand. So this demand was present, and as we are approaching in this particular area, you can see there is only one supply or one supply greater than demand kind of bar or candle. Later on, we can see this is all liquidity hunt kind of this candles. So in my view, if like for how the way how I read the market, this is accumulation taking place. Now, if you follow the schematic, it is very difficult for you to give them or identify the or name the phases because that was the difficulty I faced. But with this new study, with this new tool of mine, which I've developed especially to cater to this obstacle which I was facing in my trading. So this is uh, accumulation taking place after a markdown, and I got a spring, and after that I got a test of the spring, and then this was another heavy volume test, though it suggests this particular bar was supply demand imbalance area. That means this was a testing phase or testing area. And after this testing area, normally it's my observation. Whenever we see this kind of bar, we see a follow through by like this. So after that, we have demand. Now, till this point, this demand, whichever demand was initiated over here during this conclusion of this down move, which is later on identified as an accumulation, it held till this level. But unlike over here, this was the early sign that we got trend is about to change or it would continue its direction. So for two consecutive candles, it continued its direction. And later on, a supply greater than demand emerged in the same area where we have a toppling of prices or price has reversed. So after this, we got supply greater than demand, then an effort versus the result kind of a bar, and effort versus a kind of effort versus result bar proved itself to the upper side. But if you see closely, if you watch closely, this bar, and this bar, this particular price area, I'm not talking about bar. We are reading the tape. When we are reading the tape, that means there is the price which price behavior at a particular point, a particular price holds importance. So this price, whatever price and this has taken place in this particular bar holds vital importance for deciding that we are entering into a distribution phase. And every time we try to rally upwards, it is being hammered down, or it's been pushed down, and it's been pushed down with pressure. So this was a great effort. Like demand was greater than supply. This was the end of the this entire distribution phase, and this was the clear initiation of fresh supply or initiation of supply. And then after that, you can see prices coming down. So till this point, this was the first demand generation point, a demand coming into picture, demand coming into picture, demand coming into picture. As we are approaching downwards, you can see we are seeing weak supply. What does that mean? There are two things. If a weak supply appears at the end of the move, or when we have already, or after any demand greater than supply kind of a bar is printed or candle is printed, and after that we see this kind of price, that means it gives an early sign that we are going to see price change. So now it came down. Somewhere down the line might be support or resistance. Support might be there, or might be or might not. I'll have to check whether there is any support. Yes, this was an area of congestion which had resulted in the bounce of this particular price action. This is a V type correction. So, but it was evident this was the last. You can call it as shakeout, or you can call it as stopping volume. And after this, we have instant gratification towards the upper side. This was the first push to take the market upwards. Later on, all the things happened on a weak demand. So price appreciated on a weak demand. So now this is how I analyze the market. So now we would be focusing on what is happening over here, and what should be our next move, or what we should expect in coming week. So if you watch closely, this is the demand trend change or price continuation kind of situation was indicated at this particular point. But trend change means we are going upwards, price came down. Again, we tried to go upwards, price came down. Here it was a trend change. The trend change would be we were coming down consecutively from like past 3 months, and in past 3 months we were coming down. So if I say there is this particular bar is indicating, or it is indicating us that in this particular month or this particular duration, uh, in the coming duration or coming sessions, trend will change or trend will continue its previous trend. So the previous trend was downwards, but that out of two, one thing will happen, and that happened. Price stopped over here, and this particular downward move reversed, and we came back to this particular price zone. So now this was an effort, great effort to take the market upwards. But before taking any market upwards, like you can see, if you watch closely, this could give you a glimpse of demand exchanging hand with supply. this is the main intention behind schematic. Schematic were meant for the traders to understand whether uh, demand and supply, which side has the greater power to pull the market. So here you can see demand is exchanging hand with supply. But having said that, if supply was evident or supply was stronger than demand, then it would have gone down. It would have broken this thing and it would have come down to somewhere around this particular level or this particular level. But that didn't happen because this is a monthly chart. It will take, it take its own time to for price to reach this particular level. So this was an imbalance zone or imbalance area or imbalance price month. So when the price approaches imbalance month, demand tried its level best to take the market upwards, but later on price continued downwards. So what does that mean? There is some hidden selling taking place over here. This is not some everything is not demand because we are already in in a particular selling zone. So for me, this entire price band is selling zone. So what I'm expecting at this particular point, as we have already touched and we have already approached the trend change price area. So I'm looking out for price to come up to this level, price to come up to this particular level, 1.10 or 1.1, 1.11 or 1.10. If this is the case with in coming 5 to 6 days in coming week, if this prove itself to be a no supply kind of a bar, as we are coming down, if this is no supply, then it has to prove itself. But before that, I like to see price at least holding above this particular level. Or let me bring up my cursor so that I'll be in a better position to tell you. At least price should hold itself above in this coming 6 to 7 days. It should hold above 75.83. So if this level is held, so we can again see the price reaching this particular zone of 1.1 or 1.1 or 1.11. So this is what my analysis is about monthly. So all in all, monthly is, but provided that it should be above 1.07 or 1.08 is what I'm expecting the price to be above. 1.78 would be fine. 1.78, if it goes below 1.78, then it will again go deeper and deeper and deeper. That means in the remaining 5 days, this no demand would get converted into a absolute selling because what is we are coming out of from a distribution kind of scenario. So if this is not distribution, if it is accumulation or reaccumulation, then it has to prove itself. So before going up, there is a chance the price might come downwards and then make an upward journey. But for both the points, I'm expecting price to be above 1.07, and if it holds that level in coming 5 days, we can see 1.10 or 1.11. So all in all, so for me, market is neutral both ways. Now we'll come down to weekly analysis based on this. What is happening on the weekly time frame? So if you see on a weekly time frame, The no demand situation which was created on no supply bar was getting printed on monthly. That was because of this thing. Trend change, trend change, trend change and continuation, trend change, trend change. You can see after every trend change bar, you see either price continues its journey or either price reverses and trends and it ends the particular direction of the market. So this yellow candle or yellow color is most important aspect, a most important thing to look when you are doing top-down analysis or when you are doing analysis with the help of this toolkit. We are only reading market the way Wyckoff intended to use. He used to identify which side has greater power to pull and which side is getting exhausted. So here we have a plummeting action, price plummeted downwards. So on a lower time frame, you might see it as a climatic behavior, a selling climax, and you might, if you are fortunate, you might get an accumulation zone somewhere here also here taking place, and after that, price is going upwards. So we have a strong demand, but keep in mind we are approaching. This was a stopping volume kind of activity or climatic behavior on a lower time frame that we don't know. But having said that, price is going upwards, but this area in general holds a no demand point. Why no demand point? Because after the continuation of the price, after the strength, we see no demand. So these areas are of uttermost importance because what happens when when price reaches this kind of price areas, like whatever price you take into consideration, like 1.9238, this area is of vital importance. If there are two ways price will approach over here, either it will come up to this level or penetrate its high and it will close down, or either price will come up to this 9238 area and then it will come down. So here, all in all, move is an up move, but provided that first of all, it should hold above 8947. So 8947 is important, and after that 9238. So on a weekly, it's an up move. First price 1.07. Let me check first. Nine zero 93, I guess, right? And second would be if it breaks this one, the next obstacle would be around 9298, 1.0928. Am I right? Mistake. 923. It is 9238. Sorry. So this is what the price you should be looking out for. So if this thing goes, this is the first obstacle, 9093. If it is, if it holds this level, then it will go up to 9238, this level, and if it goes and if it holds this level, then it will go upward. So as if now the price is in up move, but the next session would hold importance, whether we see a continuation of price or we see like this bar suggests demand and supply imbalance. So there is some demand left over in this particular tape reading. By tape reading, there is some demand left over in this particular last week. So if you see a follow through of this demand, then these are the obstacles we should be looking out for. If these are broken, then I'll give you new levels. So this was weekly analysis. Now we'll jump down to daily analysis. So yeah, what has happened in this last move? In this last move, we have a climatic behavior kind of a thing. First price sell-off initiation. Then after that, you can see price selling is getting exhausted and it is getting weaker. And the how to assess when supply is getting weaker. Normally, there are many people who are using volume or VSA volume or normal volume, even vice way to analyze the supply is getting weaker. I use only this tool to assess it. How I'm getting benefited in using this one. When there is a sell-off, at the end of the sell-off, either of anyone would happen. Either we would see a red strong sell supply greater than demand kind of bar, or either small bars and the instant gratification or instant reversal would take place with no or weak demand. That would be this is basically a weak demand kind of a bar. If you hover your mouse over this one on this triangle, you can see this is a weak demand or expected upward price flow. So if this bar prints after this kind of move, then there is a high probability that in the coming session we would be getting strong like demand greater than supply or kind of a bar. Demand greater than supply kind of a bar. So that is how we got demand, one supply, and this was a trend change, uh, yellow bar, yellow candle, and after that we have a reversal. Some price retracement has taken place, but that was eaten away by this entire demand, and then we are seeing this kind of move. So when we approach this level, when we approach this particular level, what has happened in the past in this particular area? You can see this was trend change area. So when we are approaching trend change area, that means we are testing this particular price bands or price area. So it has already tested this price area. It has planned to come downwards. But having said that, what 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 are weekly suggesting? Weekly suggesting that there is some chances of upward movement. Though monthly suggesting we are mm, neutral, and because it was a white bar, that means it was after red candle. So it suggests we are neutral, but chances of price getting lower and testing this particular point and then heading upwards or heading upwards directly. So the that we have to see as we have approached over here. This is a climatic kind of a move or a stopping volume kind of activity, and after that we are prices coming down. So when price is coming down, as I mentioned earlier, either a down in a downward movement, the initiation bars or candles would be of like supply would be greater, or either ways at the end of the move. So if this kind of scenario is taking place and this is no demand, and no demand means we are here, we can expect price to coming back at this level and then going downwards. So all in all, at this particular point, what I see is if price has potential to go upwards, then it should first hold this particular level, which is something. Once again, let me bring up my 8568. If it holds 8568, yes, 8568. If it holds 8568, then definitely it is going to go upwards and it will reach this particular zone. And this zone is of 9367. So I'll write it down. Though there is a shift of change, trend taking place. So if it turns down, it will. There is a possibility it will hold around this particular level. So we will mark all the levels. This is the shortest way I can do my analysis, but I try to give a fair idea of the whatever the market is going or whatever we are expecting. 586 was the level. Up 1 0 586, right? Okay. And after that, if this is held, then definitely we would see price coming 9249. This is about daily. We will now get into H4. H4. Now, as we are dealing with H4, what I'll do, I'll bring it over here. So now, what we have in H4, price went upward. We have a trend change, and this trend change resulted in a downward movement. Then, correction to the trend change level, and then we are coming down. So now, as we are approaching downwards, see the initiation sell off points every time we were approaching this level. So this is what I called as instant gratification. We The sell off started on a like day before Friday, started with a widespread down candle. It's supply greater than demand. Then all of a sudden, supply went weak, and then this was the last minuscule supply. So if you look closely, it is taking place where there was a trend change situation occurring. So if price holds above, as we have bounced back from this particular candle, a particular price. It's not candle, it's a particular tape or particular 4 hour transaction taken place within this duration. So we have bounced back from this particular area. So if we have held this particular effort versus result price, that means 8429. I'll just write in for neutral. Hmm, neutral. NT stands for neutral. If this thing takes place, then where the price is expected to hold. Though here, what what I have little concern about is price. We had at least a pure 4 hour time frame, a 4 hour time for this particular tape to complete, but we haven't reached till this point. So it uh, it makes me bit concerned about whether it will go directly upwards or would there be a retracement back to this particular point. So I'm expecting either we would have a widespread uh, candle screaming straight away above this levels, like level of 8664, or price coming back to this particular level. So neutral, I'll give I'll write two levels so that neutral up for up it should hold this particular level, effort versus result level, 8419. Exactly. 8419. If this level is held in coming session, then definitely we can see price reaching up till this level, 1.08743. So now I'll end this session because it's a very prolonged session. So we have on monthly, we are neutral. On a weekly basis, we are in an up move. We are expecting price to break and sustain above these levels. On a daily, we are in an uptrend. So we are expecting uh, up move price to play around or price to be within 08 uh, 586 and 09249. And on a H4, at least I'm expecting price to hold this particular level of 08419. If it holds this level, then definitely there are chances and there are brighter chances that the price might reach up till 08742. So having said that, I'll end this session. Uh, H1 is remaining, but I think we've already got into many details. So this is the first top-down analysis. I'll just go through it, and it's normally it's my habit. I get into detail and I read the price. as it is, and in terms of Wyckoff tape reading uh, tool, like tape reading method, wherein he taught us to read the tape in a manner where you are able to assess demand and supply in a proper fashion. So hope you people might have enjoyed this video. If you have anything else to ask, you can ask. You can message me and you can uh, write in comment box. I'll I'll be glad to answer you. And I welcome all my critics also, because I have accuracy of 80-85%, and I'm doing very well in with this Wyckoff method. So, and I'm an analyst since 15, 16 years and taught many people. So I hope my knowledge adds any uh, value into what Wyckoff, or any value into Wyckoff work. So bye bye from my end. Look for this particular levels. If you see anything holding up or below above this level, then that means what we have discussed holds some importance. Bye bye.